Good afternoon. Today I'll give another public analysis on commodities. The reason I recently made more analysis on commodities than on Forex is simply because there are more relevant and interesting movements going on price-wise within the commodity submarket. The commodities that we will look at today are gold, silver, copper, corn futures, platinum, palladium, and last but not least, cotton as well. Let's begin. So the first commodity that we'll look at is gold, and the range on the higher time frame is the range that's explained earlier in one of the older public analysis. And this is why I would like to look at gold on the lower time frame, so for the more recent movements. And if we look particularly at the 1 hour time frame, we see the earlier mentioned strong low. So it was explained earlier that gold formed a strong low. So after these higher highs or lower highs and lower lows, this low was set, and after this changed and it became higher highs and higher lows. So these swing highs were broken, and after putting in this higher low, we saw an uptrend until recently. And after this movement, we see that gold moves within a range on between these two levels on the 1 hour time frame. And an interesting movement for today is that gold moved within this fair value gap that got formed last Friday. And after filling this fair value gap quite precisely, we see a movement to the downside. And as explained earlier in the Dutch analysis, I said that it would be expected for gold to fill in this fair value gap as well, so that it would move to the downside most likely, instead of a complete reversal, a complete sudden reversal. So the expectation would be that it moves within this fair value gap and to the lower boundary of the 1 hour range. But after that, we need to be cautious before we would decide to go for a long. So earlier in another analysis, I said that it could be possible to go for a long when it reaches this level, but we also need to keep in mind that a weak low got formed for gold, and that there's also a very big fair value gap below this range as well. So if gold makes this movement to the downside and to this boundary, what I would like to see, so let's assume that gold moves in something like this. What I would like to see for gold is that it would move above this swing high that got formed and then bounces back within this range before deciding to go for a long, because then it would be that the swing high got broken here, and it would be more convincing to go for a long in that case. If it doesn't happen, then I would most likely not go for a long, except if there is another good alternative reason to check for a long. So I would be a bit cautious before deciding something like that. And if gold simply decides to move beyond this 1 hour level, so if it decides to break this and fill in this fair value gap, then a more interesting point to look for a gold is at the daily level. It's also because the strong low got formed earlier below this level, and since this daily level got respected quite a few times earlier in the past, so either as a resistance or as a support. Obviously this did not happen in every situation, so enough situations where this daily level got broken down, but there were more than enough times where it respected this daily level, which is the reason that I still think it could be an important level and hence a possibility to go for a long. If gold decides to move something like this and goes within this upper range of the 1 hour time frame, then it could even be interesting to check for a short, especially after it makes a deviation such as these two that are happened earlier. So if we look at the last one especially, we see that while it moved above this range, we see that it wasn't convincing enough, and after a pullback it would have been a nice opportunity to go for a short with the assumption that the range would continue. The next commodity we will look at is silver, And if we look at silver on the higher time frame, we see this range that we're in. This range was explained earlier as well. Also in the first public analysis, we looked at it a bit longer and explained why this range was formed like it is. I will now just look at the lower time frame and on the recent movements that happened for silver. An interesting point to note is that earlier, so last year, there were equal lows formed for silver on the downside of this range, so on the bottom of the range. And these equal lows got swept earlier in May, so in last month. We see that there was a movement to the downside, and it looked like it was a pullback in afterwards. So it was a liquidity grab and price moved back up. But the thing is, for a range continuation, we would like to see price to indeed have this as a support zone, so the bullish order block as a place to go for a long. However, if we look at the lower time frame, we see that although gold moved above the monthly level, it wasn't convincing enough, and it moved back into a range that got formed below the range that is seen on the higher time frame. So this is the range that I'm looking at on the 1 hour time frame. This range got formed after this strong low was set. So we see that there was a movement to the downside, and after the strong low was set, it ranges quite a lot. And as you can see, the alert just went off for silver as well. So one of the things that I've mentioned earlier today in the Dutch chat was for silver that silver moved back under the monthly level, and before it did so, it looked convincingly enough that it would move in such a way. So in the Dutch chat earlier, what I said was when silver was forming this particular candle, it looked like it wasn't convincing at all that silver would continue the higher time frame range. So it was not convincing that this range would just continue again from that point. And for me, the interesting point would be to look for a short in that situation, which is exactly what I did. So if we just look, these movements earlier that were just a bit above the monthly level but not convincing at all, this was something that I expected for silver as well this time. Before that did happen, I was alert, so I put quite a lot of alerts here just to be sure that this move may or may not happen. And if we look at the fair value gap that got formed, one of the things was that a fair value gap got formed with an extreme volume imbalance. And when this formed, I initially waited for price to move back into this before deciding to go short. However, if you always have the lower time frame in mind, it is a good thing to do so, simply because it did not look convincing at all that price would indeed move into this before making the down or continuing this downtrend rather. So what I did after this small pullback, I decided to go for a short anyway with this as a stop loss in mind. And as of right now, it successfully went in. And one of the things that happens is that this fair value gap that got formed will be filled in. So last week, this fair value gap was formed, a similar move, so to say, but to the downside instead of the upside. This filled in today, or as I should say, on Sunday night in Holland. And after this move, again there was a fair value gap. So again there was a volume imbalance that formed. As we can see here, there was a volume imbalance here, and also on the 1 hour time frame, a volume imbalance in the opposite direction. And in other words, these were both expected to get filled, and as we see, this happens as of right now. If you're also in the short because you saw that the monthly level was not convincing enough to hold for silver, then one of the more interesting places to look for a take profit would be either on the lower part of this fair value gap, on the point of control where silver bounced earlier, as we can see, and or at the bottom or the lower part of the range rather, and then especially as a bonus if this fair value gap gets filled in, since there is an extra volume imbalance on the 1 hour. This was largely filled though, so there would be less possibility or a lower probability that it will get filled in, but around these levels would be interesting to look for a take profit as well. So personally, I would look either at the lower boundary of this fair value gap, at this point of control, and or at the bottom of this range to look for a take profit. However, if the lower time frame supports a further continuation of the downtrend, if this is this convincing, it would even be possible to simply write this all out until a reversal happens around these areas or even below that. And that is a summary of how I look at silver for the time being. Next we got copper, and for copper this range was determined earlier on the higher time frame, with particularly this bullish order block as the lower boundary and this daily level as the upper boundary. And for copper, an interesting place to possibly go long would be at this bullish order block. It's a more obvious place to look for a long. The less obvious place could be around the point of control and the value area low. This is more or less if you would assume that copper would simply go within the uptrend or continues the uptrend rather. And lastly, if it would be attractive to look for a short, a possibility would be to either go at the value area high or between the high volume node and the daily level. For a smaller short position, however, I did put an alert here, and I was alert myself that the fair value gap got formed on the 6-hour time frame. And in other words, if price tends to move like this, while it fills in the fair value gap, but on an even lower time frame decides to go to the downside, then it's an attractive possibility to check for a short and to eventually have it take profit around the point of control, the value area low, or even around the bullish order block. That's more or less how I look at it. And if I would have a stop loss in mind, it would most likely be either above this swing high or above this fair value gap. So it's something that I need to think of myself, but for now I simply have to wait until this alert goes off before thinking about a possible trade setup. If we look at corn, we see on the higher time frame that there was a huge uptrend due to the Russia-Ukraine conflict. However, if we look at the more recent developments, we see that price moved back into this weekly level, but when it did so, there were a few days at which corn simply was below this weekly level. And today we do see that it's above the weekly level, but if we look at the lower time frame, we see that corn has a downtrend and it makes a comparable move a couple of times. So what it does is it moves to the downside, it ranges a bit, it moves to the downside, it ranges, moves to the downside, it ranges. And if we simply continue this pattern, so I can use a bars pattern indicator to show you this. I don't use it that often, but just as an interesting note, one of the things that may happen is that it moves to the downside, it ranges again, moves to the downside, ranges again, etc, etc. Obviously this doesn't happen for an infinity amount of times, so this pattern will stop eventually. But if there is no convincing move that it will stop, then the assumption would simply be that price tends to continue in that downtrend on the lower time frame. In other words, for me it's not attractive yet to go look for a long for corn. For me, when corn moves above this swing high, and I also pointed this out with an SH on the chart, as you can see here, when it moves above the swing high and makes a pullback to the value area low or even to the weekly level, that's the moment when I would look for a long. Then it would be a more convincing move, especially since this range just got stopped, and also this pattern would most likely stop. So this pattern of ranging and a downside move afterwards would stop. If that's the more probable expectation, then is the moment when I would look at a long for corn. If this doesn't happen, then I'll simply wait it out and I will not take a long at the weekly level. Lastly, if corn moves to the swing high but fails to make that convincing move, then an interesting thing could be to go for a short between the point of control and a new fair value gap that would be formed within that time being. So then it would be possible to take a short around here and wait for the range and possibly even a continuation of this down move. The potential would be because there is a huge gap, and you could say in that sense. However, shorting is not supported at all on the higher time frame. So despite the potential, it's not something that's that probable because the higher time frame still is really bullish, which is why I first started with the possibility to go for a long. But then again, the long has to be convincing enough, or the trade setup for a long has to be convincing enough before I do so. So summarize for corn, it's a bit tricky, but we really have to wait for the movements for the time being before deciding to go long or short. The last 4 commodities to check out is natural gas, platinum, palladium and cotton. If we look at natural gas, it would be a short analysis. On the higher time frame, a huge uptrend, same reason as for corn and also for quite a lot of other commodities. We see a really convincing uptrend with higher highs and higher lows formed on the daily time frame. And if we zoom in a bit more, we see that above the daily level, equal highs were formed earlier last month. And as of now, it looks like that natural gas would move even above this equal high to take the liquidity. And it would be possible that natural gas would make a pullback after grabbing this liquidity. So more or less a correction. For me, it's not favorable at all to look for a short, simply because of the strong higher time frame uptrend. So I'm not looking forward to a short. What I am looking forward to, and this may take a while, if we assume that price grabs liquidity here, moves to the downside, and eventually grabs liquidity below these equal lows. Let me see, below these equal lows. That's the moment, especially when price reverses on the lower time frame. That's the moment when I will look for a long, simply because of the range that could continue, but especially because of the higher time frame that supports this as well. Next, for platinum, we see some nice movements. So earlier we explained in the public analysis that it would be an attractive thing for platinum to go for a long. This was back when this pullback, or before this pullback was made. So the pullback back to the weekly level. And we see a nice movement to the upside. So from this weekly level on until now, we see that platinum increases in value every day except for this particular day. So it was last Friday. That was when there was a small correction. But aside from that, a huge surge to the upside. So for everyone that follows Trias Traders, it's an awesome trade setup that would have played out, or an awesome trade possibility rather. It was not an exact setup that I shared, but more the possibility to go look at this. Personally, I took the trade as well, but I was in a bit later because at the time being, I was really busy with other things. So I didn't have time to look for that long possibility. But it was explained earlier that this was a great possibility to check for a long, and it played out really well in the end. And if we see at, or if we look at the take profits that were explained earlier, the take profits would have been the point of control, the both of them in fact, and also even the upper boundary of this range. So it would be the high volume node and or simply this level, so the upper side of the range. Those are the take profits that I have in mind. And you can even look further and assume that there would be another deviation to the upside where you could take profit. But these were the more conservative take profits for me to have in mind. So these higher volume nodes and these two point of controls. Next, for Palladium, in an older public analysis we shared that Platinum and Palladium had a pretty similar movement earlier. And the reason I looked at Platinum for a long and not at Palladium back then was because the deviations on the lower side of Platinum weren't as big as the deviations for Palladium. So as you can see, both this deviation and especially this one are way larger than for Platinum. And this is not a convenient thing because it makes it less predictable for us, or at least less likely to take a trade setup. So when we looked at a long for Platinum on the weekly level, we didn't have to keep a strong or a great stop loss in mind. While for Palladium, it would be more likely to have a large stop loss in mind when we would look for a long. However, the interesting thing for Palladium, if we look at the lower time frame and on the recent price developments, we see that price did not surge, or at least not surge yet, as opposed to Platinum. So we see that price ranges quite a lot, just a bit above the bullish order block. And a possibility would be to play this range out. I have not done so yet. I find the price action to be too choppy around these movements, which was the reason I did not use this possibility, and also because I didn't expect that the correlation would just disappear, which is why I didn't go for Palladium, but I did went for Platinum. A possibility for a swing trade setup, if price tends to move lower than the range, would be to look at when price reaches into the bullish order block. This would be a very attractive thing, given of course that the deviation wouldn't be as big as this one on the lower part of the range. And after that we can even look at the point of controls that are formed right here. The last commodity to look at for today is cotton. And for cotton, there are actually two things that I want to discuss. So these key levels for the daily, weekly and monthly, I believe I shared them earlier in another public analysis, but also the very interesting point is the fixed range volume profile that we can draw for cotton from the end of September until now. We see that there are a few price levels when there was a lot of volume compared to the rest, so pretty extreme spread of volume. So we see around these levels that there was a lot of cotton being bought, especially on the point of control obviously, but also a bit lower than that we see a high volume node that would be even in the value area where there was a lot of buying compared to the other price levels. And we see a high volume node, although much less than these two nodes. We do see that there was quite a lot trading compared to the levels near this, and most likely a lot of selling happened around these levels. So for me what would be interesting is for price, if price moves as a pullback back into the upper side of the high volume node, for me it's interesting to look for a short possibility. That short possibility would also be in confluence with the lower time frame movements. So as you can see, there were lower highs and lower lows formed. And the last movement though, we do see that price almost went to the upside of the swing high. Did not do it yet, but we're simply patient, and if price does move to the upside of the high volume node, then I will look for a short possibility with the assumption that this downtrend continues, and in that case it could be possible to take profits around the monthly level, especially since there was a lot of volume not only at the point of control but even the levels around it and even below these levels. This was a public analysis for today for commodities. If you enjoyed the video, press the thumbs up button, subscribe and turn on notifications so you're always aware of the latest videos of Trias Traders.